What's up, investing legends? Today we welcome Mandy McAllister to the program. Mandy went from top-ranked medical device sales professional to full-time real estate investor, multifamily operator, and small business owner, building a portfolio that spans apartment buildings, motels, and cash-flowing local businesses. Mandy's the founder of Aspiring Women Achieving More and is also responsible for her incredibly popular financial freedom calculator that has helped hundreds of people map their path to work optional living. We kick off the episode by digging into Mandy's leap from corporate success to financial independence, why she walked away from a high-income W-2, how a single fourplex changed her entire life, and the role her early cash flow floor played in giving her the confidence to finally call her own shots. We unpack the math, the mindset, and the moral compass moments that pushed her to build a life on her own terms. Later on in the episode, Mandy and I dive into her unique investment progression. From house hacks to doing 50-plus unit acquisitions backed by agency debt, Mandy breaks down why she prefers owning assets outright before syndicating and how she evaluates individual markets before investing in them. We also get into her experience buying small businesses, including a motel and a car wash, and the unexpected lessons she learned about operational excellence, personal values, and finding forever money instead of one-time wins. And finally, we conclude the episode by exploring Mandy's philosophy on the silver tsunami, the massive wave of baby boomer-owned businesses set to change hands, and how investors like yourself can position themselves to capture generational opportunity without outsourcing their thinking. So if you're building your path to financial freedom, trying to replace your W-2, or looking to blend real estate with small business ownership, this episode will give you the clarity, the confidence, and a playbook rooted in real experience. So without further ado, everyone, let's welcome to the show, Mandy McAllister.
Welcome to the Investing Secrets Podcast.
Mandy, welcome to the Investing Secrets Podcast.
Excited to be here, Danny. Thanks for having me.
And you ready to step inside the vault with me?
I love it.
All
I'm
right,
born ready.
Let's do it. Well, it's interesting. I was looking at your profile here, kind of leading into this, and there were some things that stuck out to me. One of them being, you were in medical device sales, and then you made the transition over to full-time investors. So great job, right? Probably paid pretty well, right? And then all of a sudden you're like, no. Let me just ditch the security of this and go straight into, full-time real estate investing. So was there was it really that drastic of a shift? Like one day you just decided, or were there like a series of events and things that kind of like led to that?
Oh, well, I had kind of, since I was 19 years old, been interested in real estate investing, but then did all the stuff you're supposed to,
Sure.
I did the master's degree and got the good jobs and all of the things, right? And by the time I was call it 37, I was in medical device sales and I had done really well. I was number 5 out of 500 or something in a year. And I don't know if anybody listening is in sales, but once you knock it out of the park one year, your number to hit just the base level the next year is just through the roof. So I wasn't hitting that new through the roof number. And my boss was just not great. He was asking me to do stuff that was not cool within my moral compass. So I realized, oh my gosh, I won't be homeless and penniless and under a bridge because I've got, it was 2,000 or 3,000 cash flow coming in at the time. And I was a single mom. I knew that I would be able to provide for myself. And the thing that was due my energy was doubling down on the real estate because I could never depend on medical device sales to help me live within my moral compass.
Yeah, I totally get that. That's fascinating. So you had a rental property that you had bought though, so you kind of got a taste of it, right? So it wasn't like you just one day woke up and said, hey, I'll try real estate investing. Now this was maybe something that you got exposed to, and then once you saw that cash flow coming in, you were like, hey, well, what if I just made this what if I just focused on this?
Made sense that it's just a math problem, right? Money comes out of my pocket and money comes in, right? So if I can just bring in enough cash flow and do the math around what it's going to cost me to live my life, at some point I can replace, what it is that I need to live my life. And I won't need that W-2 anymore. I actually couldn't find anything that helped me estimate that. So I made a calculator, and I'd be happy to share a link. It's something I give away for free on my website. Because you just, you got to know your numbers.
Right. Right. Yeah. And it's interesting because I do think that like, well, it's just like anything. Unless you really take the time to think about it and put your head around it, people think, oh, it seems so far out of reach. But it's just a simple math problem. You just reverse engineer what you spend every month and figure out, okay, well, this is how much I need to kind of like be cash flowing every month to cover that. But seems a lot more daunting when you're starting from zero, right? So
I will say that I've helped, dozens of people, probably hundreds of people go through this exercise. And 99 times out of 100, almost every single person who's done that math thinks, oh my God, it's so much less than I thought I needed. Because lots of people, if you're in a $300,000 a year medical device job, like you think, oh my God, I need $300,000 to leave my job. Well, not necessarily. You live your life how you live your life. If you have that much coming in plus some buffer, then you get to make the choice if you want that job or not. It's work optional at that point. So I'll make sure you get the link for your show notes.
Yeah, that'd be awesome. And yes, we will have that in the description and in the show notes. If you guys get that over to me, so that would be great. And that would be the financial freedom calculator. Yeah.
Yeah, exactly.
That you have. Yeah. Okay. I had it in my notes. So I was like, ask her about the financial freedom calculator. So we're on the same page there.
We're already crushing it, Danny.
I try. So Aspiring Women Achieving More is a Facebook community that you started, correct? And over a couple thousand members now at this point.
Yeah. So, during COVID, just connection was so key. Just being next to other women who wanted to grow. And, I always say you get two arms for a reason, one to pull yourself up and one to pull other people up with you. So, in, I think it was 2020, I started this Facebook group, which then, helped me realize that there was a women's division of this group called GoBundance Women. It had been a men's organization for a very long time. And the guys who were on the Bigger Pockets podcast had talked about lots of growth for themselves, having been members of GoBundance. So it grew like gangbusters, but they didn't have a women's division until about 2020. And I joined as a member. And then after getting to leave my W-2, I started serving in leadership for GoBundance Women, the tribe of millionaires for women.
I love that. And how would you say that this is, because now we're kind of like switching over, right? So you are with Good Fortune Capital, you're focused on multifamily and hospitality investments. Talk to me about what it is that you do with Good Fortune. Are you directly sponsoring these deals? Is this a fund of funds model? Walk me through how you operate.
The majority of my investments have been just my dollars, because the way that I've looked at things is, if you're deploying capital into smaller deals, like that's where big growth can happen. And I'm not against syndicating, but one thing that syndicator math doesn't normally show you, because you could talk to people who have 4,000 doors and still can't afford to leave their W-2. Like the syndication that I'm actually working to sell right now, I'm a 5% owner of the GP. So 5% of 30% is 1.8%. Like 1.8% of 100 units is a duplex. Like the power to my end game of being able to leave a W-2 and provide for my family is not heavily affected by doing syndications. And those are really short-term things. Like I'll say, this concept I have of, I did a master's in economics, and I've got this theory, this money theory, that you can do things that provide you one-time money. You can, flip a house. You can do a syndication. You only get those fees once. You only get to sell that house once. You can work at W-2 and sell those hours for money, but you can only sell those hours one time. But if you set up rental real estate that you're going to own for the long term, it's going to pay you every single month forever. Right? So if the thing I want is to be able to provide for myself and my family for the long term, I need to acquire enough assets to hit a floor of income that allow me to live my life how I want to live my life. And then I can do whatever the crap I want. I can do a syndication then. I can buy a business then, or I can do activities that build that forever money up so that I can buy a jet.
Yeah. Well, I love it. G6?
Yeah, I'm going to be a member. I've got enough friends that have jets, and like the problems, like you don't think about my ruby shoes or pinchy type problems that come along with owning a jet. I want to be a member of a jet club rather than owning one myself.
love that. I love that. Yeah, no, I have buddies that have PJs too, and they're like, dude, like all the things like the jet fuel and the insurance and the pilot and the this and that. I'm like, that sounds really complicated, man. Like it sounds really complicated. No, that's really cool. So let's take a step back. Mm-hmm. You left medical devices, your medical device sales job. You said, I'm going to start investing in real estate. So walk me through what that journey looked like for you. Were you like immediately investing into duplexes, triplexes? Did you do single families? Did you say, hey, I'm going to get the 1 to 4 units altogether, just go straight to apartment buildings? What did that look like for you?
It just so happened that the first acquisition for express purpose of investing was a fourplex for me. And it, a happy accident. I've made a lot of happy mistakes in my progression here that it was a lot of luck aligned with a lot of like really good planning. But having done a fourplex, the, automatic scale, the opportunity to not be 100% vacant. Like there were so many things going for multifamily that I really decided that that's the thing that I need to dive into. And then I immediately did a 6plex, and then I immediately did an 11. And then I realized, oh, wait, the type of lending you can get on these bigger properties, if I just go a little bit bigger, it gets so much easier. Like I'm not in this black hole of lending. I get to get non-recourse agency debt. So I acquired with some partners a 53 and then a 38. And then I had enough cash flow coming in that, I was very metered in my approach. I don't forget, I was a single mom when I was doing this. So I wasn't going to just like burn the ships like a lot of people find success with, but that didn't feel like authentic to me, an authentic option. So what I did is I ran the numbers. I knew exactly what I needed to be willing to leave my W-2. And then when I did, actually, this is a funny story. I was speaking on a boot camp. There were like 900 people in the virtual audience, and I had just hit this number. And I knew one of the guys in the 900 person audience was a colleague of mine. So we were in the same job, but just different divisions. And I said, don't sell me out, Jim, but I just hit my number that I need to see in terms of cash flow to be willing to leave my W-2. So it's my plan to, give my notice within the next 6 months, right? Well, then 6 weeks later, a lot of weird stuff happened. My boss moved away. Jim is my boss. And he asked me, was that for real? Because if it is, I need to start recruiting. So the universe kind of conspired to kick me in the pants so that I took that jump. So I think, again, another happy accident.
Yeah. It's funny how that works, right?
Right.
So yeah. And so you moved up pretty quickly. So 4 to 6 to 11 or somewhere in there, right? And then eventually you start going really like, mid double digits. Up until that point, though, you hadn't syndicated no syndications. This was all either JVs or straight up like you were doing, you were funding the whole thing. Yeah.
Mm-hmm. So I wanted that floor of income. I didn't want to be the person who had to do a deal to feed my family. I wanted to know with certainty there were those dollars planning to hit my bank account before I ever went to do something. And I'll tell you, it meant that I didn't do a ton of deals. It meant that I didn't syndicate a ton of times, but man, was I sure when I got into it. I was so sure that I was doing that deal because it was a great deal and not because I needed to do it.
I respect that because it's like, when it's your money, things are a lot different, right? And I think that's the issue that a lot of syndicators got into. I mean, they got into a lot of hot water over the last couple of years, and it's changed the landscape of syndications and funds, I think, for the long term. I think the way that deals are being structured now, like institutional size deals, or the way that they're structured now are so different than they were even just a few years ago. It's hard to find LP equity nowadays for, like large check writers. You're seeing a lot of JVs, co-GP, pref equity, and if they do the LP, there's a lot of groups that will do LP if they control the senior as well. So that's the thing. Like they need controlling rights because a lot of people just were a little bit too cavalier because it wasn't their money.
Right. I totally agree. And I never wanted to be in that situation. And honestly, there are people who have found tremendous success going for a 400 unit before they did a fourplex. But for me, I in everything I've ever done, I like to walk before I run. And I think that is a voice that doesn't often get said in multifamily investing. So, if you're out there listening, it's okay. A fourplex will not mean death for you. It's okay.
Yeah. Well, it's definitely not as sexy, right? But I just had another guest on my show, and one of my first business coach actually, pulled me aside one day, and I was a young little hotshot, realtor, 25, 24 years old. And she said, Danny, do you want to be sexy or do you want to be rich? Right.
Yeah.
And so, and you can apply that principle to so many different silos, right? So you can apply it to investing in a business. Like there's so many different things that you can apply that principle towards. And that's a great example, right? It's like, hey, like fourplex, or like you want to say you own a fourplex or 400 units. Well, obviously if you own a 400 units outright, awesome. Yeah. Would rather own the 400, but that's never how it works, right, Mandy?
I always say that I don't want to look good. I want to be good. That when it came to like the optics of stuff, like I'm in my life, I've always had to be, I think everybody is sensitive to the optics of situations, but I don't give a flip about optics. I don't want to look good. I want to be good.
I love that. I really do. Talk to me about the areas that we're kind of focused on, because I know that before the show we were chopping it up, and you were talking to me about different markets that you're focused on right now. I have here that you like Indianapolis, right, and Kansas City, and I think you said Indianapolis is kind of like where you're focused on right now, correct? Yeah.
So when I wanted to go bigger, the fourplex was near a college, Illinois State in Normal, Illinois. I figured kids aren't going to stop going to college. Like I could make that highest and best. I realized that unfurnished units were going for $400, but I could buy the bed and get $800, right? So I always like to find stuff that I can highest and best its use, because that's what really juices my returns in terms of the month to month forever money that I love talking about. But when I wanted to go for that like extra, like that larger scale that I could get agency debt behind, I live in the suburbs of Chicago, and I don't trust Illinois. I feel like, we see a lot of business leaving Illinois. We see, year over year, we've seen a shrinking population in Illinois, except for really recently, because Chicago is a safety net city for migrants. But other than that, people are fleeing Illinois because of our taxes and because it's so hard to do business here. So I actually, during COVID, had a lady in a single family home I owned. 26 months, homegirl didn't pay me rent. Not a penny of her own money for 26 months. So I realized I got to get out of here. I got to do business where it's easier to do business. So when I wanted to go larger, I wanted the big three, right? Like GDP growth, job growth, population growth. And for me in a major metro, that meant, and I wanted to be able to get down and back by dinner as a single mom. But I got to get there, I got to get down there, I got to get back before dinner. So that meant I could drive to Indianapolis, or it's a real quick flight to Kansas City. And I will say that if you are looking to go bigger and really double down on a market, something that I did is I was just so obsessed with, like, I needed the perfect market, I just wanted to be perfect. And I went like, oh, but they're doing that in Indianapolis. Oh, but Kansas City, I could do 0.2% better on my money in Indianapolis. And had I moved on anything, I would have been great. You need to just find something that's reasonable enough. There's a book called The Psychology of Money that really helped me get to this conclusion. But this idea of you don't have to be perfect, you just have to be reasonable enough. And then when I found a couple deals that worked in Indianapolis, that's when I just started doubling down there, because I believe really firmly in, I want more boring stuff. I want my money to be as boring as humanly possible.
Yeah, that's an interesting way to look at it. I want the money to be as boring as possible. Well, and speaking of boring, we were talking about this before, and I'm sure that your thesis is probably the same, not just in real estate, but also in the business world. So talk to me a little bit about your business investments, because you had mentioned that you were, it's the Cody Sanchez model. Like, is that kind of like what you're running, or
yeah? Well, actually, the guy who taught Cody is this guy Walker Dybel. And we've become friends because of my position at GoBundance Women. So his book, I consider the Bible of buying businesses, buy, then build. If you've not read that and you're interested in buying businesses, you've got to look into that book. But, if you look at kind of the math is, and to back up here, in GoBundance, there's, call it 1,300 people who have $1 million net worth or more. And you start to see examples, right? Throughout the people who found tremendous success. We do this call where people who go from a 7-figure net worth into an 8-figure net worth, because what got you here won't get you there, right?
Sure.
So looking at the people and looking at the patterns of the people who make it to a 10 million plus net worth, 100 million net worth, they always had a business interest. You can, white knuckle it maybe to 5 million doing real estate stuff. But the way to really take something off in terms of your net worth and your cash flow is with a business interest, and the data just supports it. I'll send you this other screenshot of a graph of the stratification of what your net worth is, and then what comprises that net worth. But I realized, okay, if I want to go further faster, I need to get some sort of a business interest. And that made me think like, okay, I speak real estate. I need to do an operational business that has a heavy real estate component because that's the thing that I speak. So kind of roughly at the same time, 2 years ago, I bought a motel, an 18-unit motel, and I bought a car wash. And I made little bets because I like to walk before I run to see which one was something that I would want to double down on and just kind of watch, A, what do I like to do? And then B, what is going to make the most money? Being constrained by real estate does kind of, put a lid on how much money you can make from businesses. My friends who acquired marketing businesses, they can just hire more people and the sky's the limit. So understand that the real estate was not great news for your girl when she was doing this, but it's the thing that I wanted. So when you start a business, the likelihood of it dying, of it going out of business, if you started from scratch in the first 5 years is like 90%. But if you buy a business that's been around for 10 years, the likelihood that it'll be around for another 10 years is like 90%. So you've got an inverted failure rate. So I love the idea of buying something that exists and making it better in the same way I do in apartment buildings.
I love that. So what conclusion did you come to? Did you, was the car wash or the motel more profitable for you? Or like, which one did you end up deciding to kind of double down on?
The thing that I reached conclusion on is that what I do is connection. My core value that drives everything I do. I think, a very important exercise for anybody is if you know your values, and these change over time. You got to reassess your values on a regular basis. And if you got a family, sit down with those kids and your spouse and have a conversation about your family's values. I've got mine posted in our foyer in the entryway. Right? It really drives home who we are and is this excellent filter of what matters to us. So one thing that really matters to me is connection, right? Like I am connection. So Go Abundance Women is connection of high-powered business owners who want growth in our women, right? The apartments, that's where people build their families. That is inherently connection. The motel, it's mostly girls trips, people out of Minneapolis, St. Paul that want a girls trip to go wine tasting. Like that's what we attract. That's connection. The car wash is not that, right? So they both make pretty good money. So I'm actually yesterday listed for sale the car wash, and I'm looking to double down on the motel.
Okay, cool. Very, very cool. Well, yeah, that's actually one of the reasons that I love motels. Well, one of the many reasons that I love motels is because you have a business component, right, inside of the real estate, and the business is actually what drives the value of the asset, right? And to me, it's like this perfect mixture of business and real estate. And at the end of the day, right, like if the hotel fails, you still have you still have something saleable there, right? There's still some intrinsic value to the real estate component, but you can really drive that value through operational efficiency and understanding how to, maximize the competitiveness of that business, right? Like the efficiency of that business. So yeah, I love hospitality and that's great. You are currently working on another motel project, or you have the one right now and you're working on another one?
I have Lumberjill Lodge. That's the 18-room motel on Balsam Lake, Wisconsin. It's about 45 minutes out of Minneapolis, St. Paul. The systems, we just brought management in-house so that we can, really refine that in a way that we're reaching out to other local owners of just mom and pop type small motels so that we can rebrand under the Lumberjill umbrella. And that's the plan in the next year or so.
Nice. Very cool. So almost like a franchise model then, or?
Well, and I wouldn't franchise it out. It would all just be me. The kind of the beauty is you know, it's the Ben Graham idea. Like, can you buy something with a delta? So it's like got built-in value and then bring it to highest and best. Like that is what feels safest investing to me.
Yeah. Very, very cool. I love this. I love everything about it. And honestly, you know, one thing that just kind of has been percolating in the back of my mind, you know, obviously we've got this exodus, right, over the next, call it 5 to 10-ish years, right? Baby boomers retiring and getting out of their current business. I don't know what percentage it is. I read this somewhere, but an exceptionally high percentage of non-branded, so, and boutique, right? So, but boutique kind of has this like nomenclature, like this like weird like thing about it where it's like this like posh kind of like in the burbs, you know, in the hills and that wine country boutique. But boutique, I really means non-branded hotel, right? So, but the majority of non-branded hotels in the US are owned by baby boomers.
Yes. So many businesses are owned by baby boomers. They're calling this the silver tsunami, if you've heard that phrase. We've got trillions of dollars of business ownership, be it car washes, be it accounting firms, be it motels that are set to change hands. And if you are poised, there's a real shot at big wins for the next generation. Yeah, no, I love that. And so, I mean, I think it's a great strategy. Go after the businesses and get them, you know, lock them down on bid terms, right? So I think though, you know, when things get hot, I think a thing that I always say in addition to that, I don't want to look good, I want to be good, is if you're going to fish, you don't want to go where the fishermen are. You want to go where there's fish, you know? So you can't outsource your own thinking. You've got to figure out what thing that you think there's actual demand for and a real delta and upside. And then you go fish where there's those fish. You shouldn't, you know, just because Mandy bought a boutique motel, like doesn't mean that's the thing that's going to fix your problems. You know, like, so if you're a thing that I didn't do great at the beginning of my investing journey is I thought that somebody on a podcast was obviously way smarter than me. Well, that's not the case. You just got to do your own thinking and figure out where the fish are and go do that thing and do one thing really, really well. Because what I've done, casting a really wide net on car washes, multifamily, all of the things, like the more I focus, the further I go, the more impact I have with focus. I totally agree. And I really like, I really like that analogy that you just used. So yeah, I resonates a lot with me. You know, not outsourcing your own thinking, right? And really going out there and figuring out what's a problem that I know exists, or where's the niche, right? Where's the opportunity that I know exists? And you're right, like, people are going to identify different problems based on their own abilities, right? And so I think that's an maybe under leveraged or underutilized, but especially now with AI, right? You go to AI and you say, hey, you know, like do all the thinking for me. Right? Yeah. Oh, yeah. Somebody told me yesterday, sorry, I can't get you that email because ChatGPT is down. I'm like, are you joking? What? You can't write an email? You can't write your own email? Oh my goodness. Yeah, that's crazy. That's absolutely unbelievable. Yeah, that person would be fired if they were here. I'd be like, you're done. Cool. So, wow, I have so many different directions I could take this. And so I know that we don't have like a ton of time here. So I want to be, gosh. Oh, you talked about, we talked about, what is it about Indianapolis as a market? I would like to kind of like, why do you think, I mean, obviously you talked about like the big three, the GDP and the population and all that stuff, but like, what do you think makes Indianapolis a great market to invest in? Because you're not the first person I've had on the show that's big on Indianapolis. Honestly, the first reason I looked at it is because I could get down and back by dinner, and that felt important to me. And then it met the big three. Like, can I get down and back? And is it the big three, right? And then, you know, it was a place that had fish that there weren't a lot of fishermen 4 years ago when I started acquiring. Because, if you go, everybody and their mom was buying in Texas and in Florida. And what happens when things get bought, though? The prices get bid up. So what I wanted was a return. I wanted to hit a cash on cash return on my money that I could depend on, because I wanted to build that forever money bucket. And Indianapolis at the time I was looking there met that criteria. Honestly, like I've been looking lately, Indianapolis is not what it was, because more people recognize that, oh, I'm not going to get any return in Florida. I need to go somewhere more boring. And they've crowded into other places like Indianapolis, like these 50-unit apartment buildings that I like rather than the 100 units. So I was looking at, what do I give up? What can I give up? And a little bit of size and a little bit of sex appeal in terms of market were the things that got me to that return. The sexy thing that you need to shoot for, in my opinion, is the return. I also get really nervous when I hear syndicators that are in 47 different markets. Ain't no way you can fully know 47 markets, you know? Like, yeah. I really think the reason that I have found success to the extent that I have with, I've not had massive swings and misses. I've only hit at least, like, my worst deals have been singles or doubles, and I really think the reason is because I've gotten really granular on individual spots. When I apply focus, when I know that rent will work here, but not across that highway, like that is when things go really well. And ain't no way you can know that if you're in 47 markets.
Yeah. Or unless you have like a massive team. Right. And then you have regional.
You're outsourcing your thinking, So at some point, you got to have people to grow a team, and you become your bottleneck. Right. But I think that the most primary decisions, the acquisition, the knowledge of what my assumptions are around rent growth, like I need to be so intimately involved in that, like, opinion that, I don't see my goal or my focus changing or taking your word for it. You're lovely, right? But if we were teammates on something, I'm not going to take your word for it. I'm going to have my own opinion on something that's as big as an acquisition.
Mm-hmm. Yeah, no, I definitely see both sides to that argument. And I will say this, that that's the difference between retail versus institutional, right? Because on the institutional side, like they're good clipping like an 8% coupon, right? Yeah. Like that's all they need. But we in this retail like investor space, like especially if you're syndicating, right? Like no one's getting out of bed for like less than a 14 to 16% IRR. So and that's like kind of low nowadays, right? So you're really starting to kind of like get to that point where unless you are not, like, if you're outsourcing your thinking, then you're outsourcing your return, right? Or you're right. Exactly. And so you're playing with fire there. I totally agree with what you're saying. Versus like larger institutional type firms, like they don't, because of where they're at, they don't need that kind of like hyper vigilance or like hyper diligence, right?
Well, and I've studied Warren Buffett, Charlie Munger a ton, and it's the law of large numbers and the law of small numbers, right? Like if you have too large of a number to deploy, the opportunity of doubling that is going to be way harder. So we have a real competitive advantage if we're only deploying $1 million at a time versus the 100 million that the institutional guys have to deploy. Yes. So if we look for the stuff where we can have that hyper growth, there's a much more a larger opportunity for big return for us with small numbers.
Yeah. 100%. It's value. It's growth versus maintenance, right? And that's
exactly.
Really like big difference. Mandy, you've been a pleasure to have on the show. I really enjoy, kind of like I enjoy your energy. I think like you got a lot of really great points. If the people want to find you, they want to learn more about. It sounds like you like your programs here. Some of this program is geared towards helping other individuals kind of like achieve the same success that you have. Yeah,
sure. I so many people ask to pick my brain around multifamily that I just turned it into a course. So I do have a course available on my website, mandymcallister.com. There's also tons of free resources. The first thing in the course is to do that financial goals calculator, because you need to know what a goal is for you to go after and hit it. You got to know what that North Star is. And also Go Abundance Women. So being next to other high achieving women is how I found the bravery to leave my W-2, is how I have found the opportunity to scale without sacrifice the way that I've wanted to. So information on that is on mandymcallister.com too.
Amazing. And all of that's going to be in the show notes and in the description down below. Man, you're not going to escape the vault. You're not escaping without leaving the audience with your one final investing secret. I'll let you take it away.
I think the biggest thing you can do, like the real currency in investing, is doing enough reps so that you trust your own judgment. I see it all the time with, my counterparts at GoAbundance Women, at the people that I've had an opportunity to train in multifamily. Again, outsourcing that thinking is not the thing that's going to get you further. The thing that's going to get you further is, have you done enough reps so that you trust your judgment? And when you see that spreadsheet light up green, are you ready to pull the trigger because you do trust your own judgment?
Wow, that is such a great piece of advice, because here's what I would say to that. And here's what I would kind of like support that. How I would support that is that I think, I got started in business pretty young, and I had a lot of reasons to maybe like doubt myself or whatever. But I put in a lot of work really early on in my career to where like there were things that, looking back now, I'm like, how did I trust myself to make those decisions? Right. But in the moment I did, because I just, like you said, I put in the reps. Right. And so I think regardless of what that principle kind of applies across different silos as well, not just, in investing. But especially in investing.
It all goes together.
Yeah. No, I love that. I love that. I think that is a great piece of advice, a great nugget, a great gold nugget.
In the vault. I like it.
Yeah, 100%. Mandy, you've been awesome. Thank you so much for stopping by. And who knows, maybe this won't be the last time we see you in the vault.
I like it. Thanks, Danny.
All right. Take care.